So we are now on lesson 2. Just to recap on what we learned in lesson 1, we learned about vertical lines. Okay, vertical lines. We learned about horizontal lines, how they help us to analyze. We learned about um, our trend lines. So this is for the bulls, and this is our trend line for, or trend lines for, the bears. All right. So in this lesson, we also will be focusing on this pair, which is the USD, Swiss franc. And right now we are looking at the chart um, uh, in the 1 month time frame, right? 1 month time frame. So today's lesson is about support and resistance. Okay. Now, I've tried to make this as simple as possible that we can understand, and also I am doing my lessons on a mobile phone to kind of prove that you can do analysis on your phone. It is not impossible. People prefer to do the analysis on their laptops or their PCs, which is a luxury. But unfortunately, there are some people that do not have laptops or do not have access to those things. So, as long as you have a phone, it is possible for you to analyze. Okay, so what I want to draw your attention to is the fact that in the market moves in three ways, right? The market moves in three ways, and that is um, it'll move in a bull trend, it'll move in a bear trend, and it'll move in consolidation. Okay, so examples of that, this is a bullish trend. Okay, so basically that's when it's going up, and then this is a bearish trend, that's when it's going down, and then consolidation is when the candles are next to each other like that. When they're next to each other, that's consolidation. When one candle is next to the other, that is consolidation. So normally, when it is consolidating, I would advise for you to stay out of the market or to stay away from the market, and to rather trade when you can identify that it is in a bullish trend, or you can identify that it is in a bearish trend, right? So I want to now just show you and make an illustration of um, why we need to know. We don't always need to apply support and resistance, but it's always nice to just have that information in your pocket, in case you might need it. Some people might find it more helpful than others, but I thought I would explain to you what support and resistance is in the market, and how it actually helps us in the market. All right. So, um, if we are now looking at my notes, let's look at the notes. So, in my notes, um, I mentioned that, okay, we have a bullish trend or a bull trend. Basically, it's when the market goes, sorry about that. That's just the joys of using a free trial for TradingView. You will get ads that pop up. Okay, so let's do that again. So we're looking at the bull trend. The bull trend is when the market is going up. When the market is going up. These green candles here. Okay. What is important to consider when you're looking at the bull trend is support or the floor, and all right, uh, and that you should buy low. I will explain all of this to you now. And then when it comes to the bear trend, that's when the market is going down. That's the red candles. You have to consider resistance or the ceiling, and that you have to sell high. And already I explained with consolidation that it is better that we stay out of the market when it's consolidating, unless you are an experienced trader, then you will know how to navigate consolidation. All right, so looking at okay, so now we're looking at the bull trend, right? When it comes to the bull trend, okay, let me, there are highs, lows, higher highs, and higher lows. Now, if I mention anything and you're not understanding, or maybe I'm not explaining it in a way that you understand, please feel free to um, do your own research. Go onto YouTube and research whatever topic that you feel that maybe I did not explain adequately or you did not understand. Please feel free to do that. But I will try my very best to explain um, how I see the market and how I understand the market. Okay, so in a bull trend, it'll go, the market will go up, right? So let's lock that in place. So I'm using my trend lines to illustrate. And then it'll do this. It'll come down again. So when that happens, that is what we call a retracement. So the market is basically, just to put it in a simple way, the market is taking a break, the market is breathing, or a term that we use in forex trading, the market is experiencing a retracement. It's retracing. Okay. So from there, the market will then extend upwards, even higher than the previous point. And then the market will come back down again, right? And then the market, so it will retrace. That's what we say. We say the market is retracing. So it will retrace and then it'll expand upwards again, going past that point. And then let's lock. And then it'll retrace again, right? Let's lock that in place. And then it will, ooh, sorry. Let's do that again. It will then expand upwards again. Okay. So now, if you remember, I mentioned that the bull trend is an upward trend. So you can see it's going up. So when it goes up, it 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 creates a high and then it creates a low. That's the first retracement. Then it goes higher than the previous high. So that's a higher high. And then it that high retraces, which creates a low, but this low is higher than the previous low, so then that is a higher low. And then it goes up again, and then that creates a higher high because that high is higher than the previous high. Just listen to that again. I know it sounds a little bit confusing, but you will understand. So basically, it creates almost like a pattern that looks like stairs, and the stairs are going higher and higher and higher. So each high is a higher high. So when in trading, if they talk about higher highs, that is basically what they're talking about. The fact that they're basically talking about the fact that this is a high, this is a high, this is a higher high, this is a higher high, this is a higher high, this is a low, this is a higher low, this is a higher low. Okay, So now I mentioned the fact that you have to look for support or you have to look for the floor when it comes. Now, this is very important when it comes to the bull trend. When you have a bull trend in front of you, your aim is to look for the floor or look for resistance. Sorry, for support. You look for the support and you look for the floor. Why is that important? It is important because that is where you need to enter. That is the perfect area for you to enter. So where is where is the floor? Where it retraces, that's the floor. Where you experience retracement, that is the floor. When the market is breathing and taking a break, that is the floor. And sometimes people think that it is going against them. It's now going down. Now the bears are in the market. No, the market is just taking a break. The market is just collecting orders so that it can go even higher than the last point. And also, what is also important is this area over here. Always be mindful of this area over here, and I will mark that. um, I'll use dots. These areas over here are also very important. So whenever you're analyzing, just always be mindful of these areas, right? Believe me, you will thank me. One, if you look at what actually happens is at the trend line that is dotted, you must always be aware of this area, um, especially if you feel like you've missed, especially if you feel like you've missed the move. So now, if it's going up like this, and you feel like, oh no, I didn't enter correctly, or the market um, or the market just left me and it took off and it's such a big move. Um, just always be patient. Always be patient and wait because you will notice that the market will come down, right? The market will come down to this point and it will bounce in this area. The market will bounce in this area and then it'll take off again. So that's also something you just need to be aware of. Just practice all of these concepts, and as time goes, it'll be much easier because the dotted lines, the trend line with the dotted lines, gives you an idea of when to expect the next area of support. Sometimes it might not be accurate, but it'll definitely give you a clue as to when the market is wanting to turn back again, right? So then I will then say that this will then act as your area of support because definitely the market will want to retrace from this point. Okay, so after all that drawing and illustration, how do we how do we um how do we apply what we just learned into the real market? Okay, so if we look at our trend line here, okay, our little trend line here, we will then go to the time frame, uh, and we will go to the time frame area and we will make it smaller. We will um, go to the daily time frame. Okay, so let's go to the daily time frame. So when we go down to the daily time frame and we go to our where we've marked off our uptrend, we will then realize that here is your area of support. Let's do that. Here's your area of support. Or there's the floor. There's your other area of support. And there's your floor. There's another area of support. Let's do that. Oh, and there's your floor. So basically, with what I've said, I said that, all right, so the market goes up and it comes down. It goes up and then it comes down. Goes up, then it comes down. Goes up, then it comes down. Goes up, and then something happens here on top. Basically, let's say consolidation will then take place, and then the bears come into the scene. So here, support, support, support. And these is where the dotted lines would be, if that makes sense. And sometimes where the dotted areas are, sometimes let's use our rectangle. Sometimes it's not even like the line in which um, you will find the floor or the support. Sometimes it's the area. So if we go like that, this area is where you expect price to go back up. This area, let's do that again. Here on top, here we see this is like almost like the top of the pyramid. Here at the top of the pyramid is where we will expect our structure to be supported. Here on top of the pyramid, or the highest point, or the highest high that was created there, you should expect some kind of reaction from the market in this area. So here you see that there's a very big gap, right? Where's my other, sorry. So here you'll notice that there's a gap like between this support and where the rectangle is, which is where the dotted trend line was in my example. There's a little bit of a gap, but if you know what you're looking for, then you will look out for when to enter the market. And that also comes with time and experience. Here as well, this is where the dotted lines would have been, and this is where you would have entered. This is where the dotted lines would have been for the high, and this is where you would have entered. So you can see that the support or the floor helps you to get into really good trades so that by the time you enter the market, right? By the time you enter the market, you don't have to worry. If you're here and you see the market is going up, don't enter here. Wait for the market to come down here and then catch this move. Okay, wait for the market to come here so that you can catch this move. So I hope that was clear. I will continue and make another video to explain the bear trend. So yeah, just keep an eye out for that one. So I will then say that that would be part 2 of support and resistance. So you can just go onto your charts and just practice what I just taught you. Yeah, for now. All right.